this is how you identify if a CRT formation is valid or not. Let's say the this third candle, this second candle, the sweep candle, closes with a body below this range, then it becomes invalid. You can't call this a CRT formation, right? So this is why it's very, very important that you wait for the candle to close, right? Because the candle opened here and it closed here, right? So you wait for this day candle to close. The candle range theory comprises of 3 candle formation. The first candle, which is the source, it's usually the source candle. We have the source candle, we have the sweep candle, we have the expansion candle. It helps to complete the range. That is why if I don't see a setup on Monday, I wait for Tuesday. If I don't see on Tuesday, I wait for Wednesday. I must wait for the candle to close before I make any trading decision. For a bullish CRT, the source must be a bearish, candle close, right? It must be bearish, right? For a bullish movement, it must be bearish. Then for a bearish CRT formation, the source will be bullish, right? The first candle will be bullish. The next candle sweeps it and closes below their range and all. Hello, good day, everybody. Welcome to Forex Mastery with the Soul. My name is Awesome James, and I'll be your friend and your tutor in this episode. All right, so we're talking about the CRT model, candle range theory. All right, so the candle range theory, it's a concept usually used in the Forex market for price action trading. It focuses on how price behaves within a candle range, and it's more potent in higher time frames, right? So it comprises of, and we have the types of the candle range theory. We have the bullish CRT and the bearish CRT pattern, right? So now it comprises of three candlestick formation. We have the source candle, we have the source candle, we have the sweep candle, and we have the expansion candle, right? All right, let's draw for the bullish CRT, right? The bullish CRT. So first off, let's have this. Is just pay attention. So the first candle is usually an opposite candle, oftentimes. So let's say this it's a bearish candle, right? A bearish candle. This is the source candle, right? And for the source candle, we have the range high and the range low for the source candle, right? This is the range high, and this is the range low for the candle, right? So we have this as what? Range high, and we can call this what? The range low, right? So now this is the source. This guy here is called the source candle, SOURC, the source candle. So the source candle comprises of the range high and the range low. Then the next candle is called the sweep candle. Since it's a bullish movement, so we'll have the sweep downside. So I will explain why this is bullish, right? This is the sweep candle, right? So price took out the previous days or weeks low or high. No, for a bullish candle, price takes out the previous week's low, the range low. You can see, right? Then the third candle formation is called what? The expansion candle, right? So I'll be dropping a video about candlestick anatomy, then we'll understand why the candle opens this way and closes this way, right? So this is the third candle. So the formation is usually like this. So this guy here is what this candle is, the sweep. Oh, sorry. Uh, the sweep candle, and we will call this the expansion candle. We'll call this the expansion candle. So this is the formation, right? The source candle gives us the range high and the range low. The sweep candle, takes out the previous day's low or high. For a bullish CRT, it takes out the previous day low. Then the expansion candle completes the circle, right? Completes the range. This is the range, right? So it completes the range. All right, I believe we understand that. So let me draw the bearish. This is the bullish scenario. Let me draw out the bearish scenario, right? So like I said, the source candle is usually the opposing candle. Okay, so now since it's bearish, our opposing candle will be a bullish candlestick. Yes, it opens here and it closes here. The next candle, the sweep candle. Okay, don't forget. Okay, let's just follow the process. So this is our what? Our range high and what? Our range low, right? This is our range low. Okay, let me just call this R low. Sorry. Yep. Okay. Range low, and this is our range high. Oh my god, just rushing. This is my range high, right? So this is our source candle. We call this source, the origin of the formation. Source candle, right? So now we have the next candle printing this way. Okay, so then we have it this way. A bearish close. So this is what? Yeah, you got it right. This is what? The sweep candle. Then the third candle will often complete the circle, right? You can see it will open here and it will break below the range. You can see, right? So this is our sweep candle and this is our expansion. This is our expansion candle. Okay, let me just explain a few more concepts. So you have to wait patiently for the candle closure. Higher time frame CRT formation are much more stronger. I was talking about the weekly candle or the daily candle are much more stronger. So weekly, daily, 4 hour are very, very strong. I don't go less than that. Weekly, daily, 4 hour CRT, right? So I'll be teaching us how to identify a valid CRT formation, and also pay attention to this. It is very powerful. It's a very powerful concept talking about the CRT, but you don't have to trade it blindly, right? So anytime you see it on the chart doesn't mean you'll be buying or you'll be selling, right? A CRT, either a bullish CRT pattern or a bearish CRT formation, it must align with the higher time frame bias. It must align with the higher time frame trend, right? And it must react from a key level. Let's say this is reacting from a key level, an A-shape level. I'll be teaching us that very soon. It must react from a key level. It might be an order block, a breaker block, whatever. And this guy too must react from a key level. This is very, very, very important, right? So I just pay attention to what I'll be doing. Let me take out these guys out. Now you understand. So because you have to understand that the candle prints in different ways, right? So you will not always see the candle print something like this, right? So now you have to understand that the bullish for the bullish scenario, the market opened here, the candle opened here, right? And it traded to this point, reversed to this point, then it closed, right? Then the next candle opened, sold down to this point, took out the low and went up. You agree with me that sometimes the candle can close this way? The candle can close this way. This is a very weak candle formation. It's a very weak CRT pattern. You understand? For a bullish CRT pattern, you want to ensure that the source candle is what? The source candle for a bullish CRT formation, you want to ensure that the source candle is bearish, is a bearish candle close, and the sweep candle is a bullish close. Do you understand it? That's you want this guy to close this way. You want it to close this way. It is very strong. You see, this guy is stronger than this guy. You have to understand this. The reason is because this guy, the next candle, it opens, every bearish candle opens at the top and it closes here. It simply means the next candle will open here, right? The next candle will open here and you might just trade downwards, right? But if we have it this way, so I'll just take out the time to explain this. Is the same concept for the bearish scenario as well. So if we have it this way, we already have a tweezer bottom forming below, a tweezer bottom, and it's a key level where price will always react from, right? This bottom here, it's called a tweezer bottom, right? It's called a tweezer bottom. So oftentimes the price will open from this point, dip into this key level, then start reversing to the upside. Do you understand it? Right? So let me explain the other concepts. Right? So let's say this guy closed this way. This formation is very, very weak because we can have the next candle, we can have the next candle just open and sell downwards. Do you understand it? So if you understand this price action, you will not make silly mistake in the market. So the next candle can just open from this point where this one closed and just sell downward. You understand? So I've seen this happen a lot of time in the market, and I can boldly tell you that this formation will most likely fail, except it is reacting from a key level, a valid key level, and it's in line with the trend. If not, it will definitely fail. Right? So you want to see, for a bullish CRT formation, you want the source candle. Please get this. For a bullish CRT, okay, bullish CRT, the source candle must be a bearish candle close. And for a bullish a bearish scenario, the source candle, that's the first candle that gives us the range high and the range low, the source candle must be a bullish candle close. Right? So that's it. So for a bullish CRT, the source must be a bearish candle close, right? It must be bearish, right? For a bullish movement, it must be bearish. Then for a bearish CRT formation, the source will be bullish, right? The first candle will be bullish, the next candle sweeps it and closes below their range and all, right? And you have to understand this is how you identify if a CRT formation is valid or not. Let's say the this third candle, this second candle, the sweep candle, closes with a body below this range, then it becomes invalid. You can't call this a CRT formation, right? So this is why it's very, very important that you wait for the candle to close, right? Because okay, the candle opened here and it closed here, right? So you wait for this day candle to close. That is why if I don't see a setup on Monday, I wait for Tuesday. If I don't see on Tuesday, I wait for Wednesday. I must wait for the candle to close before I make any trading decision, right? So the candle must close within the range. I remember I said this guy is not as strong. This formation, this closure, we want to see a bullish. The source will be bullish. We want to see a bullish source candle. For a bullish CRT, we want to see a bearish source. This guy want to see a bearish source and a bullish sweep. So this guy, oftentimes it can still hold price. We might have something like this, and like I have already explained, that it means that the trend is a strong one. You understand? And it must not be one candle formation that will form. You understand? You might have series of candles, series of daily candles forming to complete this circle, to complete this range. Price always travel from a primary draw liquidity to the secondary draw on liquidity, right? From the range draw to the range high, or from the range high to the range low. You have to understand that, right? So what I'm saying is that this guy, for a bullish CRT, bearish source, bearish candle close, and that is okay. Let's just say bearish source and a bearish sweep most likely fail, and same with a bearish CRT, a bullish source and a bullish sweep most likely fail, even if it closes within the range. This is the range low, range high. So this one is a no already. If it closes with a candlestick body, no, right? This can be tradable, but oftentimes it will fail. But this guy, it's very strong. Of course, it can still fail, but it's very, very strong. Do you understand it? Do you understand it now? Right? The first one is a no. You can't trade this. This is a continuation, not a reversal. So yeah, the CRT pattern is a reversal model. So this is a break of structure already, and this is a daily time frame or weekly time frame. So this is a break to the downside. So price will just retrace back. Price will just retrace back and continue selling, to retrace back, and it will continue selling. You understand, right? So this is a no. CRT must close within the range, and sometimes it can close like this. Remember, whatever I'm explaining here, you can still apply it to the bearish or bullish scenario, right? So if you have a close here, no, it can play out, but the chances are slim. But if you have a bearish source and a bullish close, after talking about the sweep, a bullish sweep, it's very, very strong, because this base here, it's a key level. It's a key level, and price will most likely react from that level to complete the range. So this will be part one. I have a lot of things to share, and I don't think I can say all of that now. So we'll just be stopping very soon. You can see, right? So we can have this to complete the range. So the same thing is for the bullish scenario. Alright, so just a quick recap. The candle range theory comprises of three candle formation. The first candle, which is the source, is usually the source candle. We have the source candle, we have the sweep candle, we have the expansion candle. It helps to complete the range. The bullish CRT, the source must be a bearish candle for bullish CRT. For a bearish CRT, the source must be a bullish candle, right? Wait patiently for candle closure. Higher time frame formation are much stronger. Weekly CRT, daily CRT, monthly CRT are very, very strong, very, very strong, right? How to identify a valid CRT. I just explained the three concepts: a break, you know, bearish, bearish, or bullish, 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 or bearish, bearish. Chances are excellent that it will fail, right? But I've explained the kind of formation you are looking out for that will play out. And also, you don't train the concept blindly. You want to ensure that it aligns with the higher time frame directional bias, and it must react from a key level. All right, so we'll call this CRT 001, right? CRT 001, right? I'll be explaining more advanced concepts in subsequent videos. Thank you so much for tuning in. The Lord bless you. Please remember to like, subscribe to our YouTube channel, and please ensure that you share this content with your friends. Thank you so much. See you on the next flip side. God bless you.